Okay, we are live and I am excited.
Hi, I'm excited too.
Yay! Okay, so before we get started, let me just share with everybody we are on a few platforms, so you may not see everybody. However, if you have questions, we will get to them and I will get them over to Shannon because she's promised us a part two for this. But for everybody that is online with us now that is getting to watch this, you're going to be very, very excited that you decided to join us. This is just something that I'm very, very excited about. Everybody knows that I believe in training and getting you to do the things that are going to take your business to the next level. And it really just starts with how you set up. So we have an amazing guest speaker tonight, and she knows all the ins and outs when it comes to your taxes, your business formation. And I'm going to let her share a little bit about herself and why it is that you should listen to her. But tonight is all about your mindset and your business formation, because a lot of you guys told me you are ready to take your business, start your business, or move your business to the next level so you can get real financial freedom. Thank you for joining us, Annette. I see you. Shannon, please tell us a little bit about yourself and why everybody should see you as an expert they should listen to.
Hi, everyone. So I'm excited to being here. Thank you, Wendy, for having me. So a little bit about myself. I am a tax strategist and I am also a realtor. So I'll tell you about how I got started in taxes, which I was born and raised in the real estate industry. A lot of you guys may know me already. And so what I got tired of doing was letting people know that they didn't qualify based on a couple of different reasons, right? Number one, you don't qualify if you don't have the finances, right? So that's something that we can't really do anything about, other than advising you of how to get those said finances through business funding or different types of funding personally as well, but more so because of their credit or their taxes. So I elected to add taxes to the business because I figured if I could help people with their taxes and point them in the right direction with their credit, I would have less of a ratio of people that I had to tell, hey, you don't qualify for this reason, and getting them actually qualified ready or funding, what we call funding ready, through their taxes. So I have been a tax professional strategist for over 5 years now. I also take a course every year, which is not required, but it is required by me because I want to stay on top of different credits and different forms and different things that would help my clients, to stay up to par with getting them either the maximum refund, or with entrepreneurs and business owners saving them tens of thousands of dollars on their tax bill.
Well, I happen to follow you on Instagram, and one of the things that amazes me is when I hear you speaking to actual clients and they're surprised that they've been using other platforms the years before
Mhm.
and how much you're educating them and then saving them money, but also getting them back a lot more. Is that because of the courses you're taking? How do you get that done?
So, absolutely. It is definitely because of the courses I'm taking. And then also, we're not the tax professionals that are just come around during tax season and then you can't contact them. We're a year round firm. We have brick and mortar, like we have an actual site that you can come into in Georgia. We do everything virtual in other states as well. But we're able to get them the maximum return because we're seasoned in what we do. And we like to educate our clients as we go along. so they don't feel like they're going into an H&R Block or a Jackson Hewitt. Those are what we call data entry companies, right? And so what that means is basically they're not going to ask specific questions, and certain answers to specific questions allows us to know, okay, well, we can file this form to kind of maximize their return, or we can compile this form with this credit to maximize their return. But most places like TurboTax or a Jackson Hewitt H&R Block, you're going to hand them your paperwork. They're going to do data entry. The system is going to spit out a number, and that's what you're going to get. So most of the time, if not all of the time, you're right, Wendy, on Instagram, we do the client of the day. And so the client of the day, we actually do live calls, and you can tell it's not scripted. And we let the people know, hey, this is your return. This is what you would have gotten back with another company, because they tell us what they're used to getting. That's one of the questions we always ask for those purposes, to say, hey, you said to us that you're used to getting $2,000 back, but we were able to get you 8,000. And this is how we were able to do it. And this is how you need to provide the proof. So we're kind of educating them, because it's not that most people don't qualify. It's just that they don't know how to qualify, what forms are looked at as records. And so most places don't file it because they don't want to have their clients go digging for deeper stuff. But I feel like, let that client make that decision. So I'm going to discuss it with you. And if you feel like you can come up with that proof that we kind of walk you through, then by all means, it's your money. You should have it.
Awesome, awesome. Now that is on personal taxes.
Mhm.
Do you also do business taxes, and what's the difference? And when should somebody start thinking about their business taxes? Is it before you start the business, or when do you suggest?
Well, you want to start thinking about your business taxes before you start the business, because you want to kind of have that in line with your business formation. And so depending on how much income you're going to make, and there's so many different rules of thumbs, and we're going to dive deep into business formation on Thursday when we revisit. And then this way I'll have some forms for you guys and some printouts. It's easier to understand when you're actually seeing it in front of you. But different formations have different positives for taxation purposes. And then some formations are not a tax structure, they're legal structures. So you absolutely want to kind of think about your taxes based on long term. You want to look at that business and you want to say, hey, is this long term? Do I expect to, maybe go from somebody who was a sole prop who just woke up one morning and said, hey, I'd like to start doing nails, or I want to start a lawn company or something like that, to, okay, can I see myself having clients that I don't know, that I'm not really just helping family, I'm going out into the world, and can I see myself profiting over $100,000 and putting into the work? But if you're going to do that, then you kind of want to think about what business formation you're going to do and how you're going to be taxed. So to answer your question, you want to think about taxes beforehand. Now, the differences between an entrepreneur and a employee is the way you're taxed, right? So I always say your money story, your financial story is super important. So when you're an employee, you really don't have too much say so. Your employee is going to tell you how much you make. The government is going to tax you and take that out first, and then whatever's left, you then are taxed on, right? And so when you are an entrepreneur, it's a little bit different. You're going to have total control as to how much you make, and then you're going to spend it, and then you're taxed at the profit. So it's you want to switch the lines a little bit. So my advice to any W-2 employees or earners is that you make sure you have a side hustle so that you can have some say so as to what you're going to be taxed on, and how much you're going to pay in taxes, because there's a big difference in the two.
So now, when you say a side hustle, everybody automatically thinks Uber, or now with the Airbnb rental arbitrage, or things like that. But what about somebody who says, I have a 9 to 5, and I get this a lot, but I want to start becoming a real estate investor, and I want to start investing on the weekend. I'm considered, um, I'm considering something uh, that I'm going to do this weekend. I'm considering
Mhm.
wholesaling. I'm considering fixing and flipping. Does that make a difference in how they set up?
Absolutely. And again, no one situation is different. Excuse me, the same, right? So it doesn't matter if it's still, the same line of work. You have to have a deep conversation as to where that person sees their business going. Now, what I would recommend as rule of thumb is if you're going to be a fix and flipper, you may want to do something like LLCs, and you may want to have a separate LLC per each property. And the reason being is I think it's important to understand that an LLC is not a tax structure, it's a legal structure. And what I mean by that is tax structures are corporations, S corps. You're going to have different perks of being filed underneath those entities, right? And so you have different expenses that you can file as well. Limited liability LLC is not that. That's more so what you are liable for. And so that's why you'll see a lot of seasoned investors when they purchase different homes, they have them in separate LLCs. So if the address is 123 Main Street, you might see 123 Main Street LLC. And that's because if you are ever sued, knock on wood, for anything with that one particular thing, then the only thing that is liable is what's in that one structure. Right. So when you don't do a LLC, or if you do an LLC, but then you don't take the extra step and file it on the Secretary of State, it then by default becomes a sole prop. And with it being a general partnership or a sole proprietorship, that means everything is up for grabs. Even if you do have it, you go on the IRS.gov and you go get an EIN and you click on LLC. If you then don't go ahead and file it with the Secretary of State, by default, automatically it's a sole prop, right? And so that is going to affect you when you're going to get business loans or business bank accounts. That is going to affect you if you are ever sued. Now, even your personal assets are up for grab as well. So that's the main thing. But for a real estate investor, that is one general rule of thumb that I can give out without hearing specifics.
Way to go. And Annette asked, what are some of the write-offs? Because you mentioned, in the beginning, so what are some of the write-offs?
So, what is important to understand is there are different write offs that pertain to different industries, right? If you are in the entertainment industry, there's over 150 write offs.
Wow.
It's very separate. So, some of the things that you can actually write off is your rent or your mortgage, a portion of it. You can write off your mileage, which is a big thing. You can write off your gas. Anything, rule of thumb is anything that is necessary and ordinary to your business, you can write off. What does that mean? If it's necessary to your business, meaning you need to have it, maybe a business vehicle, marketing for your business, billboards for your business, all of that is marketing. That is something that's necessary. But where people get messed up is certain things that they do is not ordinary. So perfect example. I had a client come in and they said, "Hey, I had to buy all these clothes." And this was actually a tax planning client. And so we kind of hold their hand all year round so that we can kind of tell them, "Hey, this is what you might want to do this month." This way, when it comes to tax paying season, they're more prepared and they don't get there. And it's like, "Oh my God, I've made all this money and I didn't really prepare for it." So she contacted us, and at first she was doing very well. We told her, "Hey, if you want to write off your clothing, make sure you stitch your logo in it because now it becomes marketing. Now you can write off, the fee to get it stitched. You can write off the actual clothing." But then she started buying Louis Vuitton stuff and
Mhm.
Birkin bag stuff. And so it was great to try, but we had to advise her not to put that on because that is not ordinary. She may think it's necessity for her business because she wants to look a certain way, but it's not ordinary. So an expense is anything that is necessary and ordinary to your business. If you do traveling expenses, that is a necessity. It's a business trip. There are certain records that you want to keep while you're on that business trip. But that is a write off as well. Your supplies. If you are in the retail business, what you purchase is an expense. When you do pop up shops, those are expenses. So, in order to answer that in more detail, we would need to know what type of business it is. And we can, kind of have a conversation outside of this to kind of let Annette know what type of expenses she can use.
Awesome. So we're going to ask more than once, but if somebody wants to contact you personally or your company, what is the best way to contact you? And then we'll continue.
So we have systems in place. It's easier to stay in contact with all of the clients and make sure that none of our clients are losing our attention or maybe double booking. So what you would want to do is if you're a tax client or requesting tax information, you would want to text or DM tax appointment. The telephone number that you would want to text it to is 470 400 8026, or you can DM it and you can follow me on Instagram at the real Shannon Williams.
Okay, so we're going to share that again as we go. A lot of people that are in real estate are taught, especially investors, to focus on an LLC before you even find your property. So are you saying that that may not be the best way? Or is it good to do that for your first deal, and then as you get more deals, you change later? What's the best
Yeah,
way?
so general rule of thumb, and again, you absolutely want to discuss it with the legal entity as well, to figure out what's going to be best in your state, right? But general rule of thumb is if you're going to be profiting more than 50,000, then you kind of want to start thinking about a C corp or a S corp, right? So C corps are not really they're not really that popular because you have double taxation. But whereas by an S corp, you avoid that double taxation and you avoid self-employment tax, which is about 15.3% more. And again, as it relates to business formation, we'll dive deeper into that on Thursday. Is the call on Thursday? The next call is on Thursday, right? So, as it relates to just investors, I recommend that you start off with LLCs because once you have so many, you can elect through the Secretary of State and the IRS.gov to be taxed as an S corp. And so you'll have your umbrella name as the S corp, and then your different LLCs will actually be underneath that. And that way, you're kind of killing two birds with one stone because you're still having that limited liability on each property.
Now, is it people shy away from S corps or corporation because they're more expensive to start? Um, is that
Well,
it?
there's more paperwork, but it's also a little bit harder to understand. You have a lot of different taxes. You have pass-through entities, and then C corp is the only one that's not a pass-through entity. But then again, you have double taxation. So, in order to figure out what entity is going to be best for you, we have to dive deep into what outcome do you want? How far do you intend to take it? What type of profit are you expecting to get? Are you going to file taxes quarterly? There's certain conversations that need to be had in order to figure out which entity is going to be best for you. So mostly people shy away from C corps because they don't want that double taxation. And so S corp is also going to avoid the self-employment tax. Pass through entities, you're going to be taxed personally. And then double taxation, you're going to be taxed through the profit before you distribute to the members, and then after you distribute to the members, you're also going to be taxed at on that too, which is why a lot of people stray away from C corporations because of that double taxation. But there are perks to both. It just depends on, again, the conversation that's had to figuring out what type of business and certain questions that need to be asked and answered to figure out which way we need to lead them.
I was actually impressed when I came to your office for actually, to get my own business taxes updated and double tax. Okay. We're going to ask that in a minute. And I was very impressed because as I was coming in, a young man was coming out, and you had saved him so much money that he was able and got him a really good return in his business, that you were able to take his clothing line. He was able to invest a lot more, and you even showed him how to sell more units. So it's very, very impressive what you do. You don't just deal with one type of a client. And what made you say that I can show this young man how to, you know, go from where he is and see a bigger picture for him?
Well, he's a client. So he's been a client for some time. And so we take the time out to kind of get to know our clients, because one of the first questions that we ask are, what are your financial goals for the year? Because we want to make sure that their taxes are in line with that. There are so many times where, just like the gentleman that you're talking about, we actually, he came to us after the year before that he went to somebody else, they did his taxes, and he tried to qualify for a home, but they didn't explain to him that he had too many deductions. And so we kind of have been his tax strategist from then. And so we kind of know his backstory. And then he's also a bookkeeping client of ours and a tax planning client of ours. So we kind of know his business's DNA, if you will, their financial DNA. We, with bookkeeping, we can kind of determine, hey, this is what you had left over this month, or in this month you had a really great month, you had so many new clients, but this is where you focused on in marketing versus the month before, when you focused this amount of money in this tool of marketing, you didn't have as much. So we were able to kind of lead him in the right direction, because we're very familiar with his business and how he runs his business, because we handle the bookkeeping and the tax planning for him. He's a part of the monthly membership for tax planning, and then he also is a bookkeeping client too.
Awesome, awesome. So people have those options with you. And the question again is, why would someone opt for the C corp for double taxation?
So typically, when you have double taxation, they're still to a point of the profit margin. So if their amount is lower, so put it like this: when you have uh your S corps and your C corps, it doesn't make any sense for you to even opt into that until you are at 50,000 or above. So a lot of that goes by their profit. So it may not make any sense for you to jump to an S corp if A, you don't have a bunch of LLCs that you want to file underneath your S corp, or if your profit margin doesn't make sense to do that. So I think that whomever is asking that question, they may be on limbo on if they want to file a C corp or S corp. So we would want to have a one-on-one with them to answering their questions.
And I know even for one of my clients, you shared with them like the amount of money you made. You should come out of the LLC because you're being taxed at the wrong bracket, and you're actually giving the government more money than they're entitled to. And if you would just simply change from an LLC to an S corp, can you explain that, the different tax figures, or how
Sure.
they determine?
So it's also important to remember that an S corp is a pass-through entity as well. So that means that you're going to be taxed on that personally, and a C corp is not. So that may be another reason why somebody would opt to do a C corp versus an S corp. So when it's passed through to your personal taxes, you are taxed on tax brackets, right? And so from one amount to one amount, you may only be taxed at 10%. Okay. From another amount to another amount, and I'll give you the figures here soon, you'll be taxed at another percentage. And it just goes up. The more you make, the more you're going to be taxed, which is where the expenses come in to bring you back down to say, hey, I'm not supposed to be taxed at this amount. I need to be taxed at this amount. But here's the thing with the C Corp: a C Corp is not a pass through entity. And that specific entity, besides the second taxation, instead of tax brackets, there's a flat rate of 21%. So, in essence, if you're doing a pass through entity and maybe you've made the amount that would have you taxed at 34%, you may want to actually come to a C Corp so that you have that flat rate of 21%. But if you're not making enough profit to where you're only going to be taxed at 12%, it may not make any sense for you to become a C Corp because you're basically just jumping up when there's tax brackets in between. That's why it's very important to discuss and kind of look into your business on how far you think you're going to go. And again, you don't really know that, but you want to spend some time to kind of gauge where you think it's going to be. Because if you expect to, this is something new, you're not going to be spending a lot of time on it, you're going to make less than 30,000, well then, it's okay to just stay at that LLC mark. But if you start feeling like you're going to be making more than 50,000, well then we need to start to have the discussion on what a C Corp does for you versus an S Corp. Does that answer your question?
Yes, that does. And so the more money you make, if you're not in the right tax bracket, the more the government takes. And this is why you see so many extremely wealthy people paying less taxes, because they understand the formation and they have
Mhm.
good people in their team. I'm a huge believer in team building. And so I look for somebody who's an expert in their field, and then I invite them to the platform, because it took me, the platforms that we have, the meetups and all of that. I invested a lot of time building the groups. So when I invite somebody to speak on the group, it's somebody that's been proven to do what they say they do, and to, really help the community to move to the next level, because I believe in dreaming bigger and doing more. So touch a little bit on the mindset of somebody that will come and have a conversation with you.
Yeah, I can. So let me just start here. Because we're going into mindset, anyone who knows me knows that I am big on mindset, right? And so when you make a decision that you're going to be a business owner or an entrepreneur, you really have to shift the way you think. And that's besides taxes, because if you don't see yourself as that business owner, it doesn't matter how many courses you take, it doesn't matter who says what, you're not going to get there because you don't see yourself there first, right? So as it relates to answering your question, um the mindset of a W-2 employee, from what comes into and from the years of experience I've had, is how much can I get back? What is my refund? So first of all, let's take a step back and talk about what are taxes, right? Taxes are just a way for you to square up on what you owe the government, if they owe you or you owe them. That is all it is, right? It's a way to say, this is how much I made, this is how much you can tax me at, or this is how much you can't tax me at. This is not what I made, this is what I did after profit. But when you are a W-2 earner, you kind of know that there's not much you can do. If you filed exempt all year, chances are you're going to owe. And so if you don't kind of lean back on expenses from a business, you're going to owe. There's nothing that you can do about it. So the mindset of an employee is more so, what is my refund going to be? Can I get thousands of dollars on a refund back? The mindset of an entrepreneur needs to shift, because when you're an employee, you typically have an HR department that is taking those funds out for you. When you're an entrepreneur, there's nobody there taking those funds out. So chances are you're going to start off owing. There's no ifs, ands, or buts about it, because you're not paying on those taxes unless you have, a tax person, a CPA that's advising you that you should be actually filing quarterly. And we'll talk about the 2 seasons of taxes a little later on. But if you're not filing quarterly and you don't have those funds in reserves, then you're going to start off owing. If you've made $100,000 and you're taxed at 24%, you automatically start off at owing 24,000. So at that point, as an entrepreneur, a business owner, their mind doesn't shift to how much can I get back. It's more so, how much can I save? And they are absolutely excited when they break even. And if they happen to get a refund back, then they're super excited. But in their mind, they are more so trying to figure out, how can I not pay so much? And I preach this all the time. If we are doing what we're supposed to be doing as a as an entrepreneur, meaning you're going out there, you're hustling, you're marketing, you're doing the work. it makes no sense for you to not handle your business as a business and not a hobby. Because then what happens is you end up wasting money. You spend all this time and hard-earned energy and work actually bringing in the money, but then you don't do what's necessary throughout the year because we're so used to just tax paying season that we now owe all of this money. And so what you should be doing is you should have a tax strategist or a tax professional, a CPA that you are in touch with monthly, because they will kind of keep you in line with tax planning, which is kind of like damage control. So like I said, we would touch on the two seasons. Now, when you are a seasoned entrepreneur, you kind of your mind kind of shifts from knowing, because if I ask this question to about 10 different people, I'm going to, and these are new entrepreneurs, what are taxes? They're going to say, oh, it's a way to rob from people who are making more money. That's not it. That is not, and you'd be surprised in how many ways I hear the same thing. That's not it. It's not a factor of making more or less, or the rich or the poor. It's more so a factor of the educated and uneducated, right? Wealthy business owners know that there is tax evasion and tax avoidance. Tax avoidance is something totally different from tax evasion. Tax evasion is when you are underreporting your income and overreporting your expenses. That is illegal. Tax avoidance is when you understand tax codes and you understand what industry you work in. So you understand how to keep certain records so that certain things are a write off and other things are not. So that is the difference between the mindset. When you first have to go from saying, okay, I'm now a business owner, so I want to run my business again as a business and not a hobby. That's how you start getting into grants and business funding. They're always going to ask you for the last 2 years of tax returns, because that's how important it is. And then they're also going to want to find out, how did you file your business? Because now they're looking to find out, did you file your taxes correctly? Did you file the correct forms? Everything is not on a Schedule C. Some things need to be filed quarterly on a 1065, which is basically when you are doing your taxes quarterly and you kind of want to gauge where you expect to be, and you want to pay that quarterly. And so when you get to that tax paying season, which is, the beginning of the year that everybody's used to, you already have money in reserve. So that $24,000 that we kind of talked about and used as an example, that $24,000, you've already been putting $5,000 quarterly. So now you already have 20,000 of that money there. And then once we tap into those taxes and we start writing off the expenses, well, then we find out that you really should have only paid 10,000, and then you will get a refund of that difference of 10,000. But if you don't do the tax planning in between, you're not going to know, okay, if I do this here, if I travel this way, and if I keep these receipts, and you just wait till the end of the year or the beginning of the year to file your previous year's taxes, by that time it's too late. So again, that's the shift in the thinking. When you're a business owner and a seasoned business owner, it's how, so I want to make the money, but I want to keep the money. I don't want to make mistakes that is going to have me making the money and then just giving it all away to the government because I didn't keep proper records, or I didn't know how to keep proper records. And if I didn't know how, I didn't invest in myself and my business to get with the correct people to teach me how.
Yeah, because I find a lot of people are afraid of the word tax, or even talking to an accountant, or a CPA, a bookkeeper. They're afraid of all of that, especially when it's a poverty mindset.
Mhm.
So, and what I mean poverty mindset, I don't mean that you're broken, you have no money, but what I mean is that you're taking on habits that are going to keep you broke. So
Mhm.
you have to shift your mindset, because I have to say, for me, when I started in real estate and I created an extremely successful business, but until I had a bookkeeper and my own, it was an accountant that helped me even start the formation. And the person that helped me start and form my business was an accountant. I'll never forget him. And but after my business became successful, then I needed a bookkeeper. I needed a person that was on my team as an accountant.
Mhm.
They can focus on all the laws and all the things I need to be doing. And I was shocked that he even shared with me places I could get more money for the real estate deals or to pay. They even showed me how to get funding for my assistants, my staff. So there's a lot of benefits of just having this conversation. Do you agree?
I do. Like for instance, I see a lot. So like I mentioned earlier, and you'll see me looking in different directions because we're on different platforms. So I want to give attention to everybody, guys. But one of the things that I see in my office, because we do funding as well, or we help with different business funding, is so many people that have been my clients. So I know these are legit companies, right? I know that they run their businesses as legit companies, but they do not have their filings together, meaning they have employees, but they want to 1099 them out. Or, they have employees, but they're paying them on Cash App. There's nothing wrong with that. But when you do that, when we have these opportunities, like right now, we have the ERC, which is the Employee Retention Credit. That is a credit that will give you $5,000 to $27,000 per employee. However, you have to have filed the 94941 quarterly. If you're like, what is that? Chances are you have not been filing that, right? So
Mhm.
that is your quarterly
That's
taxes.
the next question.
That goes to show what employees you had. They had to have been W-2 employees. So that's what I mean by, if you're taking the steps to actually, you're doing the work, you're paying these employees. Some of them are employees that you've had all along. You keep paying them continuously for the same things. At least some people know, to go ahead and give them a 1099, but so many people don't even do that. And that should be included in your tax story when you're filing, because that's a huge expense that you're not getting credit for because you're not paying them correctly. So this ERC credit is for anybody that had a business during the pandemic, and maybe they suffered a little bit, but they kept their employees on, hence the name Employee Retention Credit. But this is grant money. This is money that you don't have to pay back. You don't have to try to get it forgiven. It's just money that you do not have to pay back. And so, could you imagine what you could do if you had W-2 employees with just two? That's almost $60,000 that you don't have to pay back. But when you don't have the correct paperwork, or you don't know what a 941 is, and you're in an entity to where you should be filing quarterly, that's a problem. And it's more so a problem because when these opportunities present itself, you're not going to be able to take advantage of it. So I encourage anyone that's facing that right now. First, we had the PPP, we had SBA. There were some other things that came out, and you said to yourself, hey, well, I'll correct my stuff later. It passed me by this time. And now we have a bigger one. Everybody's like, well, we would love to get the PPP or the SBA. And SBA, you had to pay back. PPP, you did not. Now this is something, and you could only max out at 20,000 if you were a sole prop. This is something to where you could get 5,000 to 27,000 per employee. But again, you have to at least have filed the 94941 quarterly to even qualify, and you need to have had W-2 employees. So we don't know what other grants are going to come out, right? That speak towards employees and business owners, but I encourage you to kind of get your stuff together now so that the next thing that does come out, you're not facing these type of things to where they're just passing you by and you're like, oh man, I could have put that money back into the business. I could have expanded the business. I could have done more marketing. I could have hired more people. Um, that is the purposes of taxes for business owners. The government is going to reward business owners that are doing things correctly, because we are doing, making the economy grow. We're paying people, we're hiring people, so they want to reward us for those things. But you can't, and here's where mindset comes in. A lot of times when we're dealing with poverty mindset, right? It's more so what somebody else did to stop you from getting your business or getting a grant, or I walked in and they didn't want to give me a loan. Well, would you give you a loan? Let's look at what you are presenting to people. First of all, you're a new business if you're a new business. So it's kind of like those buy here, pay here places. You're already a risk, right? So then when you have things where your business addresses don't match up, you
Exactly.
don't file the things that you're supposed to file, you're then telling that bank or whomever is going to approve you or look at your stuff for a grant, I don't take my business seriously. I'm running it as a hobby. So why would they? So poverty mindset says blame other people. When you shift out of that and you really want your business to have longevity, you want to figure out what you can do better. And business formation and taxes are the first thing that you're going to have to do. That is the foundation. Since we're talking to a lot of investors, you would not purchase a property and allow it to go through inspection and the foundation is horrible, because that property is going to fall. And that's the same thing with the business. So even with the ERC, if you know anyone and it doesn't matter how big or small, if it's a mom and pop pizza store on the corner, if it's maybe a daycare, as long as, or a large corporation, as long as they had W-2 employees, and they have filed 940, 941s, then you would qualify. And our office would kind of handle the application for you, and do what needs to be done to ensure that you actually get it. But we can't do anything if you don't even have the paperwork that needed to be filed. And so you want to file those 940, 941s because, as you said, Wendy, people get scared over handling certain things. But when your business is in line, it becomes very easy. I can't tell you the difference in energy that I feel from people when they first come into the office, and they're always like, "Oh my God," which you'll see on my page, they're always like, "Oh my God, I know I'm gonna owe," and they just have this negative energy and they're so fearful. Versus the people that have been with me for years, they kind of just know, hey, here's my business bank account, and they let us go to work and they sleep comfortably at night because they know that we've been working with them month to month to month before we got there. We started training for the marathon. We didn't just show up and say, hey, I'm going to run 10 miles today. We trained them beforehand and we made sure all of their documents were in line, and we made sure that we kind of educated them on everyday living that people don't even know they could write off. And those are the type of things that are going to get you from owing a $50,000 bill to breaking even.
And we're going to touch more on this stuff on Thursday. You've given so many nuggets today, and so I really, really appreciate it. But I also want to share with everybody that you have been gracious enough to say that you will be doing a monthly training on taxes. And if we can just nudge you a little bit, you would do it every other week for the people in the Meetup group. So, and we'll expose it to everybody else that wants this information, because
Mhm.
it's not only, this is the information age, but if you get the information and you don't apply it, you're going to see other people that are applying the information move and become successful. And a lot of the stuff that you gave, I'll be very honest with you, people are charging thousands of dollars for some of the information that you gave so freely. And so I'm very, very excited to have you continue to share more information. But for now, if somebody wants to get in touch with you, again, how can they do it if they have more questions that we can address for them on Thursday? How can they get those questions to you?
So typically you want to either DM, and then also you can go to the website. It is www.tax with D2R. So that's TAXWITH, D as in David, the number two, R as in Robert, .live, excuse me, LIVE. And on there, it will have the different programs that we have, different services, the tax planning. So let me just explain to you the difference. Tax planning is a membership, okay? And like Wendy said, you I know some people that actually charge $30,000, $40,000 to actually do tax planning, right? And their logic is, and I totally get it, I totally understand it, but everybody's not going to be able to pay that amount. And I don't feel like they should be X'd out of getting information or being educated if that's what the route they want to go. The reason why people charge so much for tax planning is their logic is if I'm saving you $100,000, it should be worth 40,000,
Mhm.
right? So we've come up with a way to still assist those people who may not be in a space right now to do bookkeeping. Bookkeeping is a couple of $1,000s most of the time, depending on who you're going to a month, right? And some people, their profit isn't really there, but I will step back and talk about mindset in that area. You have to start paying for things that are going to allow you to keep the money that you have. Because if you're considering, hey, 2000, I just don't, it's not even that you can't pay it, it's just that you don't want to. Well, then you really have to figure out what type of investing you're actually doing in your own business. And so if you don't know your financial DNA and know where you are, or where you started, or where you were 3 months ago versus where you're going to be in 6 months, there's no way you're going to be able to make financial decisions for your business because you don't know where you're starting from, right? You don't know P&L statements, balance statements. You haven't really begun to talk about that and have those conversations. And wealthy business owners have those conversations fluently, right? They understand what that means, although they're paying somebody to handle it for them. But if I had a conversation with them, they would know exactly what that means. Now, I'm not telling you to, my stuff is not even 2000. I'm just using that as an example, investing in your business. Now, bookkeeping is going to be a month to month thing where you have somebody who is actually going through your finances. They're separating your income versus your expenses, and they're then categorizing them in different areas. And then they're doing this month to month to month to month. They're also handling your accounts receivables. They're making sure those bills are paid on time. They're making sure that even if you're an S corp, that you're paying yourself the correct amount, because that is another requirement. And again, we'll get into that on Thursday. You have to pay yourself what is the amount that you would normally pay somebody to do your job in order to be an S corp. That is a requirement. Okay, so a bookkeeping company would handle all of that for you. So when you come to tax paying season, everything is always already there, and that's how you're able to sleep better at night. Now, tax planning is something a little bit different, to where you don't have to pay $700 to $1,000 a month, and maybe you don't want somebody to pay your accounts receivables for you. Maybe that's something that you're just not there yet. So tax planning is only $100 a month, and what that does is it's going to send you a monthly newsletter. It's going to send you hacks. It's going to send you how-tos monthly as to how you're going to keep certain records. Like I said to you earlier about the hack of stitching your logo in the clothes, it would spit certain things like that out monthly. It's going to tell you things like, hey, if you are an S corp and you are maybe paying your children, how to pay them. So now it's a tax deduction. You're going to buy your children all these lavish things anyway. Why not pay them to be in the company and pay them through the company and let them spend their money the way, you would spend it, and now it's a tax deduction. So tax planning is a way to kind of do damage control for a more a lesser amount that you're paying, a more cost efficient way to still starting to have that conversation of P&L statements and financial statements and balancing and how to keep certain records. So if you want to know more about that, you can go ahead and visit the site, which is www. Again, taxwithd2r.live. If you have questions, I'm more than willing to answer certain questions for people in this group, because I understand the importance of education, and we are in a period of time of education. But what I will ask you to do is be transformational and not transactional. Don't really just listen to what Wendy's telling you, or what I'm telling you, or what the next person, a guest speaker she has speak. Actually do the work and be transactional. You know what I mean? Transformational. Actually do what they're telling you to do, so that it doesn't go in vain. So if you have any questions, you're more than welcome to DM me, and I can answer all of those questions for you. It is tax season, so our office is very busy, but not too busy for you guys.
Way to go. So we really, really appreciated. We have people even on YouTube with some of their questions and stuff, but we're going to have the questions collected and then share more on Thursday for the people at this same time. And this will be up for replay, and we're going to go ahead and make sure they have access and your phone information. So to close us out, tell us again, what is the one nugget you want to give everybody before we say goodnight, and then we're going to let you close us out.
The one nugget I'm going to say is to make sure you file your taxes on time. Don't be one of those people who just doesn't file because maybe you're nervous, or maybe you're just like, I don't have all the paperwork, so I'll just do it next year. Eventually, those things are going to add up. And after a certain amount of years, even if you are owed a refund, you won't get it. It'll just sit there as a credit, right? So you don't want those things to happen. And you also don't want, the IRS knocking at your door. Filing and making a payment plan is not illegal. They will accept that all day. But not filing year after year after year is going to be what allows the IRS to come knocking. And not only that, most of the time, especially if you are a 1099 employee or a W-2 employee, anything outside of being self-employed, the IRS already knows what you made, because if the company that is giving you that 1099 or the W-2, because a lot of people are entrepreneurs, but they still work for a company. And so those companies have to file that. They're using that as an expense. So when they file, they're going to say, hey, I paid Shannon $15,000 on a 1099. So you're thinking, okay, if I avoid filing it, then I'm avoiding taxes. No, but what you are doing is you're leaving them to kind of make their own financial story for you. At least when you file, you can say, yes, I, Shannon, did receive that $15,000, but here were my expenses that came from that. So realistically, you guys owe me money, as opposed to just letting it stay where it is and not filing and allowing them to think that they should be taxing me at $15,000. So that would be my one nugget as far as taxes go. As far as business formation goes, I would definitely recommend that you sit down and you really have a conversation with yourself, or if you're going to have partnerships, make sure you have an operating agreement, because the operating agreement is going to kind of really take all of it's going to be set in stone as to who does what, when they do what, how do you dissolve the company, all those things that cause family members or friends or business partners to fall apart would be all lined in that operating agreement. So you don't have to worry about that. Really consider where you expect your numbers to go. Where do I expect to be? And dream big, as long as you're going to have the work behind dreaming big. If you know that you have the potential to making $250,000 next year, well, then make sure you're asking the questions of, okay, well, how would this entity benefit me? Know how many members you're going to have, because that makes a difference as well. What percentage of equity each member is going to have, because that's going to determine the percentage of how you file your taxes as well. So that's what I mean by there's so many different conversations that need to be had one-on-one, but I encourage you to map it out. It's better you map it out and somebody explain to you, hey, it doesn't work that way, or it does work that way and this is how, versus not knowing anything and it's just like, hey, I want to file an LLC because that is what you've heard. Again, please remember, an LLC is just a liability. It is a limited liability company, which is a legal entity. It's not a tax entity. And most importantly, I encourage you to, where if you are a sole proprietor or a general partnership, really come out of that, because legally you're allowing your personal assets to be, up for grabs as well. And so if anything happens, Maybe you're a hairdresser and you left some product in somebody's hair too long, and maybe there's an issue there. But now that person is now able to sue you personally for your car, your personal home, all of your personal assets. Whereby, as if you just become an LLC, because you're in the beginning stages, you don't expect to make $50,000. Now they can only sue you for what is in that company. So those would be the main takeaways that I encourage you to really delve into and really think about.
Awesome, awesome. Well, Shannon, you have shared again tons and tons of nuggets. I have learned, even though we communicate and you share a lot of information. I sit on a lot of your lives because you just give so much information and easy ways of getting this done. So I can't tell you how much I appreciate your time tonight. I
Thank
appreciate
you.
the information that you shared. And we're looking forward to Thursday at 7 p.m. And we're going to go ahead and put out the flyer to get people ready to be there. So, with that being said, again, thank you so, so much. And one last time, the best way to connect with you is
So text or DM tax appointment. If you're texting it, it's 470-400-8026. If you're interested in business formation, you would text or DM business formation to the same number, 470-400-8026. And if you're DMing it, you want to go on the Instagram platform, which is at the real Shannon Williams. And I just want to say thank you for having me. I believe that we actually have a responsibility. It's each one teach one. So we have a responsibility to teach our community and answer certain questions. So I appreciate you guys being here. And if there's a way for Wendy to collect email addresses, we will make sure that you guys have packets next week as we kind of get a little bit into business formation.
awesome, awesome. Thank you. I will make sure that we get the emails over to you, and we're going to leave this up on the Facebook. We're on at least 5 different platforms on Facebook. We're on live on even LinkedIn, Twitter, and also YouTube. So we're going to leave it up there for a minute so that people can get their questions to us. Shannon, it's been awesome. Really, really appreciate you. So proud of the work you're doing for the community and just for helping people take their business to the next level. This is Wendy Lovejoy of the REIA Meetup, and we love, love, love sharing information. Again, that's going to take you to the next level. Have a great night, everybody, and make sure you connect with Shannon Williams. She'll definitely help you with all your tax, business, and personal. With that being said, have a good night, everybody. Bye.
Bye. Thanks for having me.
My pleasure. You were awesome. Awesome.